Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 11th of April. Starting off with the FTSE 100, which has managed to breach the 50-day moving average around 77.40. We've got the next resistance there at that February resistance line, 78.50. And then through that, we've got the chance of a move up to 8,200 maybe over the next 1 to 2 months. Obviously, that would be a record high for the FTSE and everyone would claim the glory. But at the moment, just the technicals are looking at a new high for the FTSE if we can get through 78.50 relatively quickly. On the downside, 76.40, which was resistance on the way down, looks like the support area for this market. That was also the initial April support. Not expecting anything worse than that over the near term. Moving on to the DAX, which was never as bad as the FTSE, which is slightly ironic perhaps, but here pushing into higher territory now, gapped up today, and basically above 15,700. We're looking for the first September resistance line at 16,200 over the next couple of weeks perhaps, and then as a best case scenario by the end of next month up through 17,000, which is the other September resistance line projection, in fact 17,100 now. Upside valid certainly while we're above the 50-day moving average at 15,400. Worst case on the downside, currently the floor of that rising trend channel from October around 15,100, but really with the 50 and 200-day lines both rising, not really expecting much weakness below that, and the RSI now around the 60 mark, which is right in the penalty area for fresh gains. On to the Dow, where we've got a situation where the market was, I suppose, the worst of the three, but actually now the three indices we look at. But here we're well above the 50-day moving average, so better than the FTSE. Little bull flag there as well, based at 33,300. Looking for a break of that one-year resistance line, 34,000. And above that, we would then have the chance of heading up to 36,200, which seems highly unlikely at the moment, but that is what the charts are suggesting. Only back below the 50-day line risks another test of the 200-day line at 32,400, but we're not really looking that way. This looks like a mid-move consolidation, mid-move bull flag rather, and we should see at least another attempt, or an attempt, on 34,000. Market of the day is certainly Bitcoin, and here, after going on about the possibility of this market getting back to 30,000 like a broken record, we've finally seen it happen over the bank holiday. The old range, basically 26,700 to 29,000. We were looking for an end of day close through 29,000 to signal that we were heading not only to 30,000 but actually 32,000. And at the moment, that resistance line from June heading to 32,500. The important part of that is that that was almost exactly the level on the way down back in May last year. So we're almost inverting the whole move down. This looks like an extended U-shape combined with an inverted head and shoulders as well. So breaking 32,000 would really be the key for this market. And one could then say that this market is finally out of the woods after that horrific decline that we had from near 70,000 and record highs. If things go pear-shaped, end of day close back below 29,000 could take us back into that range of 26,700 to 29,000. But that's about the worst we're thinking of at the moment. On to the stocks, and couldn't resist looking at Argo blockchain because obviously they are involved in the business of creating bitcoins. Here we've got the shares up 10%. We're in a rising trend channel from December. We had a bear trap island reversal, which certainly was correct in forecasting the move towards 20p. The gap closed there around the 6p level, so 6p to 20p. Not a bad result. Current situation is that we're stuck below this February resistance line. That's around 15p, almost exactly at 15p. So an end of day close above 15p is needed to unleash not only a move towards 20p, but the top of that channel at 27p, which obviously seems rather unlikely at the moment, but in these markets you never can tell. Below 15 there's a risk, I suppose, of a test of 10p again if everything goes wrong. On to Block Energy, which had a great RNS today. Here the situation is that the shares have not only hit the top of that broadening triangle and the target we had around 1.7p, they've gone even further. So looking for the shares to retest October resistance as high as 2.4p, maybe as soon as the end of this month. In fact, things looking rather better at Block Energy than they have for quite some time. The next target, really, if we get through 2.4 pence, would be up to 3.6 pence over the next 1 to 2 months. So it looks like we finally got a proper turnaround for Block Energy on the daily chart. This stage, really only back below the 200-day moving average, around 1.3, 1.4 pence, really cancelling the idea of a big recovery for Block. On to Celadon, which is one of yesterday's alumni, one of my the best of 2023. Here we've broken the key resistance again, which was around the March peaks, around £1.60. So above that, we're looking for £2.40 as soon as the end of, next month, probably even the way things are going, by the end of this month. And only back well below the 150 area now, delaying the upside scenario for Celadon. You can note there that we had that golden cross at the turn of the month, which is powering the shares higher as we speak. Onto another stock which had a good RNS today. I think a very impressive one, actually. Shares only up 6%, but probably deserve to be up more. Here we're still grappling with the 50-day moving average on the Dekel chart, but above recent support at 2.25, looking for at least the 200-day moving average and that line of resistance from last May at 3 pence, and maybe by the end of next month up to 3.5 pence at that December resistance line projection, effectively the top of a triangle that's been in place since the turn of the year, which I'm just drawing in there now. And the added bonus was the way that the turnaround was foretold by that bullish divergence that we had last month. On to another stock which is maybe defying the critics and the cynics. Here we've got Genflow, and the start here was from a bear trap gap reversal, unfilled gap to the upside. We broke that gap day on the 4th of April, the following day, and it's been up and away ever since. Above the 200-day moving average, around 2.5 pence, we're looking for the top of that August triangle, broadening triangle, as high as 4.5 pence, perhaps as soon as the end of next month. And top marks to the guy on Twitter who came up with the harmonic signal well before the shares moved. So that was absolutely brilliant and very impressive. Moving on to a stock which had a speeding ticket RNS today, and good to see that the shares are up a third, even off the back of that. So maybe whoever thought of the speeding ticket maybe might be thinking about it again, rethinking whether they should have put it out. Here we've got a situation where we've gapped up through the old resistance around 1.25. That was resistance on the way down in September. Above 1.25, looking for 2 pence at that June resistance line projection, and maybe we could see that by the end of this month. Obviously, there may be some profit taking, but at least while we're above 1.25, looking for 2 pence, which still represents reasonable risk reward. Another stock which made my best of 2023 and is celebrating today is Metals Exploration. I was upset that I hadn't covered the shares enough, but now the situation is that above the initial 2023 resistance around 1.9 pence, we're looking for not only 2.5 pence at the top of that broadening triangle from last July, but also a 3.5 pence target maybe by the end of next month. This looks like a proper re-rate situation going on. It did start with a bear trap and a bullish divergence in the autumn, and the shares have built on that with a ricochet off the 50-day moving average that we had last month. So basically above 1.8, 1.9 area, looking for further gains on Metals Exploration. The other good sign in the markets, apart from when a speeding ticket RNS actually doesn't push the share price down, is when shares rise after a fundraise, and that's what we've had with Mosman. Here we've got the 50 and 200-day moving average is now starting to stabilize. In fact, the 200-day line looks as though it's ready to rise. The 50-day line also rising, so it could be that we're in the run-up to a golden cross. If we are, which we'll find out in the next day or two, then the target here is up to 0.11 pence as a minimum, while we hold above the 0.06 pence level. So looking very encouraging there after a long time there at Mosman. Petro is next, and this has been an improving situation over the recent past. We just had a bit of jiggery-pokery around the 50-day line over the course of March, but it looks as though the stock is ready to push higher. The reason for saying that is that we already had a rising 200-day moving average, but now the 50-day line is curling up as well. That suggests that we should easily retest the 5.5p zone, which was January resistance, by the end of this month, and then maybe look to higher ground over the course of May, June. Just how high the shares could stretch is suggested by the line of resistance that I'm drawing at the moment, which is heading towards 8p. So maybe 8p by the end of May, given the way that both the 50 and 200-day moving averages are both rising at the moment. On to Saietta, which also got a mention yesterday. Here we've got a situation where the shares are up another 15%, and we were looking for the shares to basically retest the 80p area, which was resistance on the way down, and I'd then added to that with a target potentially up towards 105, which is the top of that broadening triangle from November. End of day close above the initial April resistance at 69.5 could be the start of a move up towards the 105 area. If you're cautious, you should just be looking for the 200-day line at 87p, but with that unfilled gap to the upside and the push that we've had over the last couple of days, I think 87p may be the least we'll see on the upside, even if the shares cool off after that. Good news today from Seed Innovations, and market a bit churlish in terms of reacting, but we've had a gap through the 50-day moving average. We've already noticed the break of that December resistance line last week, and so good follow through really on a technical basis, even if the shares aren't up that much. Bullish divergence line in place in September, so that should also add to the idea that we could hit the top of that broadening triangle from September as high as 3p maybe by the end of next month. On to one of the biggest rises of the day, which is SpectralMD, with the very positive news that the company's heading towards the Nasdaq. Here the key is that we remain above the resistance on the way down, which was 40p. If we can do that, then one would be looking for not only a return to today's peak around 60p, but actually a break into new higher ground. But let's let the dust settle before we maybe take a view there. The interesting point to note is that ahead of today's massive run, there was bullish divergence. We had lower lows for the stock, but higher RSI trace, so that may be indicating that one or two people were bottom fishing the shares near the low. Obviously a very clever thing to do. On to Scirocco, which was a stock which I also suggested I didn't look at enough. Here we've broken through the initial target there around 0.47 and above 0.47, looking for the next level up, which is an April one-year resistance line projection as high as 0.7. In fact, I might have been a little bit stingy with that. You could say that that line is actually heading up to 0.8, but let's go for the 0.7 area, given that that was the resistance on the way down from the shares. Upside certainly valid while we hold above the 0.5 area, and what a great move for the shares. Finishing off with United Oil and Gas, which also looks like it's finally rehabilitating itself after a long time in the wilderness. Here we've broken the 200-day moving average around 1.55p for the first time since July last year, which is very significant. It also means that our initial target here of 2p should be hit by the end of next month, and maybe we could hit up to 3.5p at the top of that November rising trend channel top at 3.3p by the end of next month. Ideally, we don't trade back below 1.4p in the meantime, but breaking that 200-day line looks very significant indeed, and the top of that gap there towards 2p from November should be a reasonable target. That's it from me today. More updates tomorrow.